Hello everybody, I think we'll slowly make a start on this week's market outlook and recap of the week. So welcome along. Just to explain for those of you who maybe haven't attended these before, we normally do these every Friday at 2:30 UK time, and it's a catch up with what's going on in the markets over the week, what's been moving, a look ahead. We'll have a quick look ahead to the major events for next week. Then we'll go through all the different markets. We'll go through the major stuff, Bitcoin, stock market indices, couple of FX pairs, oil, gold, silver. And then I'll go into the questions into the chat, and we'll take a look at any markets that you want looking at. So as I'm going through the normal range of markets, if there's stuff you want looking at, just feel free to put it in the chat there, and we'll take a look at it as we go through. Let's just do the risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, next week. Let's have a look at what's going on next week, then we'll jump into the markets. There's a lot of inflation interest rate stuff next week. So starting on Wednesday, we got Australian inflation data. Clearly, inflation is a really hot topic at the moment. All the central banks are saying that it's going to be transitory. It's going to be temporary, this higher inflation. I would be worried that it's going to be a bit less temporary than they think. You know, we look at commodities now and again on this, and you look at all sorts of commodities over the last 12 months. I mean, oil's an obvious one, but the likes of cotton, coffee, what's the other ones? Sugar. They've all had an incredible year, and I just don't think this idea that inflation is going to be short-lived. I think the risk is it isn't. But anyway, we'll find out more next week. We've got Australian inflation data next week. Canadian interest rate on Wednesday. Thursday, we've got the Japanese interest rates decision, the European interest rate decision, big week for interest rates. US GDP on Thursday, so how well or not is the US economy doing? And then Friday, we've got European inflation. So inflation very much in focus for next week. So we'll see what happens. A quick reminder of the contact stuff. Go to Capital.com to find out more about the company. You can access the trading platform, open a real account, open a demo account. Any questions, drop me an email. I do have to apologise. I've been very slow on catching up on my emails this week. I've got a few questions from this week. If I haven't replied to you yet, I will reply to you. David.jones@capital.com is my email address. Follow me on Twitter, @JonesTheMarkets, and follow Capital.com on YouTube, Twitter, and Facebook. Okay, that's it. We are going to start off with, prepare the fanfare, Bitcoin. So all-time highs again this week for Bitcoin. So this is where we go through all the different markets. And I thought, well, let's start off with Bitcoin because it traded through that old high in, when was it, May or April? 64,750-ish. Punched through this week. So what was it? Wednesday this week, traded up to nearly 67,000. And there was big news in the world of Bitcoin this week. There was an ETF was launched, an exchange-traded fund was launched that tracks Bitcoin futures. So again, it's a way of, you're a typical investor who maybe doesn't want to get involved in buying crypto, but wants some exposure to the crypto space of doing it, via a stock market listed ETF. So again, I would make the argument that I'm trying to see if we've got it here, that it's widening the appeal further. Here it is. I think that's the one. ProShares Bitcoin Strategy ETF. So that's the one. You can see it only came to the market a few days ago, so we don't have that much data on it. But that was the big news in Bitcoin world this week, and away it went again. So that's a heck of a move in Bitcoin. Just since this, over the last month, it's up by 50% over the last month. And there's a couple of trades in this account anyway. For those of you, again, who haven't watched this before, I do trades. When we do a video on the channel, a pre-recorded video, I try and do a trade if I can. There's a couple of Bitcoin trades from 43,000 from the 20th of September. So clearly they're doing okay. So that's up 730 quid so far. And I moved the stop loss up to 57,000. And it's interesting, clearly if a market moves out to all-time highs, traditionally it's seen as bullish, it's seen as positive. But what I think just to perhaps inject a note of caution, if we go back to March, April, when Bitcoin back here, probably April actually is the better. So March that is, what am I talking about? March breaks out through the February high, sells off, breaks out again in April, and then sells off, and we had that big sell-off into July. So I would just be perhaps a bit nervous up here that even though we've broken out again, are we really going to get the same follow-through? I don't know. I've got those long positions on Bitcoin. I've got my own long positions in my own account as well. I've got tight stops and the more to take profits if the market starts coming off. But I think it's clearly interesting. It's clearly been an interesting week for Bitcoin. So there you go. So if I was a buyer now, if I didn't have a trade now, what would I do? I'd be looking to buy now at the moment. And the trade I would do, the closest I'd have my stop, I'd probably have it down at 58,000 at the moment if I was trying to buy Bitcoin. Because again, a $5,000 stop on Bitcoin is nothing. The thing, as we know, it moves around, can move around a lot more than that over a few days. There was an interesting question, actually, that I haven't replied to on a video that went up earlier this week, that somebody said, why don't you place tighter stop losses? And I think I'm a big fan of having wider stop losses, because what I want to do, it was on the silver trade I did, I want to try and catch the bigger moves in the market. I'm not really that bothered about where the market's going to go in the next half an hour, next couple of hours. I want to try and catch the big moves. And look on this account, the biggest winner at the moment, Tesla. So up 900 quid on Tesla. And that trade's been running since the 18th of May. So I want to try and catch the bigger swings in the account. I'm not interested in just, the next $2,000 in Bitcoin. I want to try and catch the next $10, $20, $30,000 in Bitcoin, for example. So, and I'll reply to that question properly, but on the channel. But I thought, I think the first mistake people make is not to have stop losses. So they've got no risk control, so they're gamblers. This is why most people lose when they're trading. They're just gamblers. And I think the next mistake people make is to trade something really volatile. Let's take Bitcoin as an example, but trade it with a really tight stop, and wonder, well, why did I get stopped out? Well, let's say we bought Bitcoin now and we put a stop loss $1,000 away, which sounds like a lot, but it isn't, because our stop loss would be at 62,200, which is where Bitcoin was about 15 hours ago. So you need to, for me anyway, I'm quite happy to have what some people would see as wide-ish stop losses, because I don't want to get taken out in just the noise. If I'm trying to follow a trend, and clearly Bitcoin is in a trend, I want to try and stay with that trend. I don't want to just get knocked out on a little bit of noise during the day. So so I think giving some thought to stop losses is time well spent. Anyway, that's Bitcoin. So breaking out, Bitcoin ETF, all pretty bullish, but I would just perhaps be a bit wary about how it performed when it was up here last time. I haven't looked at Ethereum at all this week. I was guessing it's going to... it hasn't quite broken out, Ethereum. I suppose that's a bit interesting, isn't it? We're still... maybe it's had a little tiny look through... no, I don't think it has it? What was the high? The high was 43.70 and it's traded up to 43.65 on Ethereum. That's interesting. So interesting one to watch next week, both of these, to see if we get... a breakout on Ethereum as well next week. But I thought that was it's an interesting week in the world of crypto. Right, let's get back to more traditional markets. S&P 500, the broader US stock market index. And I haven't said this for a while, but it's hitting fresh all-time highs again. So it's interesting that that sell-off we had in the S&P from early September. That's the deepest sell-off we've had for some time. And I think like a lot of people, you've got pensions and ISAs and stuff like that in the UK, and I've got a lot of my stuff invested in S&P trackers, and it's great when the market's trending up and blah, blah, blah. But I took off a lot of that, not a lot of that risk, about a third of it in the second week of September as it was falling, because I thought, well, perhaps this time ends up being a bit different. And we did have this deeper sell-off, but we're back here again. So I'm going to be looking to pile on more risk again in the S&P now. We're pushing out to fresh all-time highs, even as we speak. It's quite an incredible turnaround, I think. We've had worries about inflation, worries about economy slowing down, worries about Evergrande, the Chinese property giant, all of that sort of stuff, really hung over markets into the first week of October. But once again, here we go, all-time highs. So yeah, I mean, it's bullish. It'd be interesting to see where it finishes today. But assuming that does continue the move out to fresh all-time highs, then I need to move my trend line like that. So the trend is still up, but we've got a bit of a slacker rate of ascent. So I think it's going to be a really interesting, I always say interesting, a really interesting finish to the month for stock markets. Given it's bounced back this much, and what would you do? I'd have to be a buyer of dips again. After something of a wobble in September, it looks like stock market strength is back, and for me, we've got, a definite line in the sand now. Those October lows down at 42.70. I think if the market fell through here over the course of the next couple of months, I'd probably get out of all my S&P stuff because I think that's a much more worrying sell-off. But for now, it's been really impressive how this market's bounced back, and it still looks to me looks strong again. Let's have a look. Let's have a look at the Nasdaq. I did do a trade on the DAX this week, which is still running. We'll have a look at the DAX in a minute. But the Nasdaq isn't back up to all-time highs yet. Those all-time highs are still about 300 points away from where we are now. But again, a similar bounce back in the Nasdaq over the last couple of weeks or so. So definitely worth watching. I mean, the stock markets are always interesting, and I think, if there's only one market I could ever watch, it would be the S&P, because I think there are lots of opportunities in all sorts of time frames. But I'll be paying more attention than usual, I think, to these stock markets in the next week. So DAX, let's have a look at that. The DAX, I think it's still perhaps a little bit boring. I bought it earlier in the week. It was a shorter term trade. I'll show you where I did the trades. And it's finally started moving today. But I put the trade on here, basically, about 15,460 on the 18th. That was, 4 days ago. And it's all been a bit chop. But it's finally got a bit of a move on today in the last few hours. So on my own trade, I'm up a bit and I'm trading a stop, and we'll see what happens. But on the dailies, I suppose it's going to look a little bit boring still, isn't it? So that's the DAX, and the DAX did trade down 6th of October, traded to its worst levels since May, I think. I mean, that was a big level, 14,800. Look at that from early May, how much that held the market up, and it's held it again. So again, I think we've got a line in the sand for the DAX now. If it was to turn down from here and break 14.8, perhaps we get a deeper sell-off. So after, I think, definitely a trickier month than we've had for some time in stock market indices, the strength has come back again this month so far. The FTSE, let's take a look at that one. FTSE 100. Again, a bit of a funny old wiggle in September. It's not quite decisively taken out that August high at 72.40. But again, we're only 8 points away from it. But again, if the S&P continues up next week, you'd expect markets like the FTSE to get dragged up as well. I suppose if you thought stock markets are going to fall, it's a great time to go short something like the FTSE, because you've got an obvious level for a stop. If you're going to go short at 72.30, put a stop at, 7300, 73.25, something like that. It's a good risk reward trade. It's very overbought, or it has been very overbought on the 10-day RSI. Let's see what happens. But for me, I'd be taking my lead from US stocks, and I think they do look strong. Let's see where they finish today. And finally, for stock markets, the Japanese index, the Nikkei 225. We've seen massive volatility on that Nikkei. It was a great trade, actually, to go and do a Harry hindsight trade 2 weeks ago, when it got smacked back to the lows for the year, the Nikkei. Because we'd had that really weird move in August. In August, it moved to new lows for the year. And by September, it was just about at new highs for the year. And then it got slammed back to 27,000. And here we are at 29,000-ish on the Nikkei. So again, you know, that 27 level is a real line in the sand for the Nikkei. So yeah, it's interesting one. I've just seen a question come in that's relevant to what we're doing now. Would you trade UK stocks or US stocks? If I was going to trade stocks, I'd trade US stocks, because I just think you've got a better mix of stocks. You know, you've got a lot of volatility out there. You've got good trends, all that sort of stuff. So for me, I would always lean towards US stocks. And ultimately, this is why I watch the S&P. You know, I think clearly all countries around the world have their own stock markets, but ultimately we all do tend to follow the US, what's going on in the US market. So for me, that's why I always look at the S&P first, because for me that's the most important one. So do you want to, would I want to trade a secondary market, a follower, or I'm going to trade the market that everyone else is watching? And the hours are better as well. You don't need to get out of bed early. So I think for me, US stocks would be the choice for me. Right, what should we look at next? Oil. Let's have a look at oil. I missed an oil trade this week. I wasn't kicking myself, but there was a really good opportunity this week. Again, a pretty short-term trade where I think it was maybe just before the inventories come out. And I was watching it and I thought, oh, I should buy that. Because I think it was here actually. It was, when was it, 2 days ago. And it got slammed down about 1 o'clock, just below $81. And I thought, I bet it doesn't stay below $81 very long. And it didn't. And it was up at $83.50 by the end of the day, but I missed it. And I could have, there was the same opportunity yesterday actually, but I was out all day yesterday. But I think it's interesting. If you occasionally get extreme moves, for me, if they pull back from that extreme pretty quickly, and what I'm thinking about here is the old support here, short-term support. This is an hourly chart, but there was good support at 81. I think if it looks through support and then pulls back quickly, it can be a good trade, and it happened twice this week, and both times I didn't do it. But let's go back to the dailies anyway. But it's still strong oil, isn't it? I mean, the trend is up, blah blah blah, the usual, isn't it? We had a bit of a wobble in from July into August, but here we are. Just yesterday, this is West Texas crude, traded to its best levels since October 2014. So 7-year highs on oil, which is where we are now. So again, for me, if you've watched a few of these, the mantra: buy the dip, trade with the trend, all the usual stuff. So for me, definitely still be a buyer on dips in oil. I think I'd probably only change my mind if it started slipping much below about $76 a barrel. So I'd rather perhaps buy a dip rather than buy strength now. But you can't. It's really overbought. Look how overbought it is. If you're looking at the RSI, it's been overbought for a month, but oil doesn't care what its 10-day RSI is doing. So it's great. Great trends. It does sound a bit crazy, but if we were going to come up with targets, I'd be saying like $100 a barrel, which is only $17 from where it is now. I mean, $100 a barrel for oil a year and a half ago, when it was negative, you think it was ridiculous. But $17, it's moved $17 since early September, pretty much, or late August. So for me, that trend is still strong. I don't think I've got any oil trades on at the moment. I think I've had orders in this account to try and buy oil, but I think they've just all slightly missed being filled. So I've got no oil trades at the moment. But for me, that trend is still up. Let's take a look at natural gas while we're on the old energies. Natural gas has been an absolute nutcase market in the last 6 months. Of course, if we take this out, we go back to March, and again, I think I mentioned last time, that the higher energy prices have really hit the headlines in the UK, at least over the last few weeks. I'm sure it's the same in other parts of the world. Interestingly, the company Uswitch, which is one of those energy comparison websites, which again, if you're in the UK, you're probably familiar with. I heard an advert on the radio from them today, and it said, look, you know that energy prices are so high, there are no deals out there. So our advice is to stick with what you got, but when you're ready, but when things change, come back to us and look to switch. And I thought that just shows you the state of the energy market at the moment, that, you know, costs are so high, there are just no deals out there. And it won't last forever. And it's one of those things, I think, you know, we've been watching natural gas go up since April of this year. And it's only when things went absolutely nuts in September that suddenly the broader media picks up on it. And I think one of the things to be aware of when you're trading, if the broader media picks up on a story, that could well be the sign that the trend is ending. When suddenly everybody's saying buy natural gas or buy cotton, that can be the sign that everyone's a bit too late getting in. But here's our trend in natural gas. I mean, it's come off, you know, quite a bit this month. It traded $6.50 and it's been as low as almost $5. So what's that? $1.50, 20% move off the highs. I've got a long position on natural gas. It's been a great market for me this year. It was an absolutely terrible market last year. Every trade I did on natural gas, I think on this account on the videos, I would sell it and it would go up. I'd buy it and it would go down. And silver has turned into my sort of bogey market this year. But natural gas has been a great market for a trend follower this year. So there's been some great trades on the way up. For me, that trend is still up. If I was a buyer now, again, the closest I put my stop loss, if I was a buyer at 557, I put my stop loss down at the other side of 475 because you need to give the thing a bit of room. But it'll be interesting to see what happens with natural gas. I think if it starts breaking below 5, perhaps we could see a deeper sell-off. But for me, you know, perhaps some of the froth has gone out of the market over the last few weeks or so. But that trend is still up. So it's always an interesting one. And of course, it all feeds into inflation again and the cost of living, doesn't it? This is why I think we're not going to see, you know, inflation perhaps as temporary as some of the central banks would have us think. So what next? What have we done next? Let's do the euro. I've got a trade on the euro as well, actually. That's not doing anything so far. I bought it. I think it was only yesterday I bought it, and it was a similar move, I think, to the gas trade. Not the gas trade. The oil trade that I didn't do. I think it was a couple of days ago. I think it was here where it had a really good week or so, euro dollar, and it sold off and it pushed below these old lows, and I bought in and I've got a stop loss, I don't know, down here somewhere, and it's been up a bit, been down a bit. It's doing a bit better now, but I still think they're quite difficult markets. Euro against the dollar and pound against the dollar. I do still feel as if we should start to see a base for the euro down here and perhaps a bit of strength. But, you know, it's not really being confirmed by the trend at the moment. You know, this month we have seen the euro against the dollar at its lowest level since July of last year. So personally, I wouldn't be going short down here, but I'd rather sit on my hands from a longer term trade point of view and see if it starts to build a base down here. But I think for now, you know, I'd still argue that trend is still down on the daily chart for euro US dollar. So even though I do feel as if we could have a bit of a comeback for the euro, I'd want to wait for the price to confirm it. So let's see, and we'll have a look at pound against the dollar, pound against the US dollar. I think that's had a good run actually, because there's a lot of chat in recent days about the Bank of England maybe starting to raise rates sooner than the market was initially thinking, and I think it will be. You know, quite a not momentous, but I think it'd be quite a signal when banks start raising rates again that we could actually get back into a cycle of rate rises, particularly if inflation starts getting out of control. But let's see. But that's the pound against the dollar. It's interesting. We've been in this downtrend since June of this year, and it's sort of flirting with that trend line at the moment. I suppose for me, if I was going to do a trade here, maybe this is the trade we'll do. I'm gonna go short. I did actually trade it last week long, but I'm gonna go short here because I'm going to take the view the trend is still down. Okay, it's had a little look through that trend line, but we've still got quite a big hurdle up there at 139 and a bit. So again, this is where my wider stop loss comes in. So let's say I'm going to go, I don't know, what's the high? If I say 139.30 for a stop, my stop is 150 points above where it is now. But, you know, it's moved a couple of 100 points or 150 points this week. So I want to give the market time to prove me right. If I sell it now, it's highly unlikely I'm going to nail the absolute top for the pound. It might have a little squiggle around over the next few days. So I want to be short and sit with the positions. I'm going to sell it short here and see if we get it a push back to maybe 136. Let's set that up. So we normally risk 100 quid on these live stream trades. So 139.30 is the stop. So at the moment, my risk is 180 quid. So I need to trim that risk down. If I sell 10,000, there we go. So I'm going to sell 10,000 pound against the dollar up here at 137.89. Stop loss at 139.30. And you can see it on the chart there, just up there, above those highs. Maybe I should even have it a bit higher. I'm going to go. Let me put it a bit higher. 139.50. There we go. Which means I'm going to have to reduce that trade a bit. There we go. Knock that down to 9,000. So I'm selling 9,000 with a stop at 139.50. Risk of £100 or so. Sell. There we go. Let's go. Short. So we're short 9,000. Let's see how that one works out. But yeah, so for me, perhaps it comes under a bit more pressure again next week. Let's see what happens. Let's take a look at silver and gold. Then we'll jump into the questions. I can't believe it. I went short silver yesterday in the video. It really is the market at the moment that is doing completely the opposite of what I think it should be doing. But it's been a frustrating year for silver, for me. I think for a swing trader on silver, because it's been sideways. So for my own trading, I've not done anything. I think I've done one trade in silver this year. And it was a great, it was some really interesting times last year with silver. We had that great run into, I think it was 7-year highs in August. But it's been a bit sideways, quite a bit sideways since then. It did briefly push down to a low, 21.41 at the end of September, which was the lowest it had been. We had to go back to July of 2020. But looking at that strength today, I think in the video that went up yesterday, I said if it can clear $25, then I shouldn't be short. So we'll see what happens. See what happens up here. I think if it can break through 25, then it does look like finally that trend from June is over. But like I said, I've been the wrong way around a few times on silver this year, so my trading mojo is definitely out of step on that one. But I think $25 next week, or even today, see what happens. See if it can break through there. And if it did that, I'd be inclined then to be a buyer of pullbacks in silver, and it will probably halve then. But let's see what happens. But it's interesting. I mean, it's had a great run in October. And that's what stop losses are for. You're not right all the time. So you've got to have your stop losses to manage your risk. But in October, it's gone from 22 to nearly 25. So it's nearly 15% move this month. Let's see what happens. Gold, I did a gold video this week. And I think I'm long gold at the moment. Yeah, long gold from 1778 on gold. Oh, it's a bit of a move today, gold, isn't it? It must be dollar weakness going on. We'll have a look at the dollar in a minute. I still think this is still a pretty boring market, gold. This is the year so far, really sideways. Okay, it's having a bit of a run today. For me, I think we've got real hurdles up here on gold, around 1835. These highs from July and September. So let's see. Let's see what happens. But I did the trade. I bought it in the video this week. Where is it? Where's the trade? There's the trade, gold. So bought it at 1778 with a big stop again at 1640. There's the silver trade that's losing money. Because just to buy into that longer term trend. So I said it's not really it's definitely a medium term trade was my thinking behind that. And I wasn't expecting any massive gains in the next couple of months, but I thought it'd be interesting to put a trade on gold, even though it's been sideways this year, because that 3-year trend is still up. So I thought that'd be interesting to do it. So that was the reason behind the trade on that. But I think it still might struggle, up towards 1835, because it's been such a problem for 3 or 4 months now. Let's see what happens. But again, it's another interesting one to watch next week, isn't it? We'll see. Let's have a quick look at the dollar, then we'll jump into the questions. So we'll have a look at the dollar index, because I'm guessing that we must be seeing a weaker dollar today. It's a bit weaker. It's not crazy weak, is it? So there's the dollar index. The dollar index is a really interesting market to watch because it's the dollar against a basket of other currencies. So I think it's good, always good to see, like the broader dollar move. And it had been, I think we have built a base this year in the dollar. The January lows, then again in the May lows. I think I do have a trade running somewhere on this. I'd still be a buyer on dips. I'd still be inclined to be a buyer on dips for the dollar index. So I think that's another interesting market to watch next week. Clearly getting hit a bit today, but lots of support. I mean, it's quite a bit lower than where we are now, but I'd still be inclined to be a buyer on dips for the dollar index. So let's see what happens. Right, we'll jump into the questions. Before we do that, just a quick reminder. So go to Capital.com to open an account, download the app, open a demo account. David.Jones at Capital.com for any questions. At Jones the Markets on Twitter, and follow Capital.com on YouTube, Twitter, and Facebook. Right, let's have a look at the questions. So, just as everything's interesting to watch next week. I think Bitcoin's interesting because of that ETF thing. Stock markets are interesting because they're at all-time highs again. So let's see. My broker spiked the price 20% in 5 seconds at the closing. Juventus. Does that mean they're stop hunting? No. It just, it depends. You can get some strange moves in markets. So Juventus. So I don't know where it was you were looking at, but you can get some strange. It's a bit of an illiquid stock. You can see it here, can't you? But 5 minutes into the close, I don't know where the close was, but it doesn't look like the most liquid stock in the world. And I think you just do get, to me, that there doesn't look anything. If I looked at the right time scale, there doesn't look anything massively out of the ordinary on that. And you can see you do get some weird spikes. That's on the open. That's halfway through the day. You do get some weird spikes on Juventus if that's the stock you're looking at. To me, it still looks, there's nothing out of the ordinary. And some of these more thinly traded stocks, which it looks like Juventus is, you do get some weird movements now and again because of lack of liquidity. Please check PayPal. There's actually a video going up on our stocks channel this afternoon on PayPal. I'd be a buyer of PayPal now. But if you look in the link for this, the description of today's video, there's a link to our stocks channel, and we put 3 stock videos up a week. So they've put this bid in, haven't they, for Pinterest. So they've offered $70 a share, I think, or thereabouts, for Pinterest. And the share price has been knocked. The share price has been knocked back 10%. I take the view that perhaps it's been overdone for me as a trade. And if I was a buyer now, the closest I want my stop would be the other side of the May lows, 230 lows. Again, it's been a bit of a sideways year for PayPal. It did very briefly in July push out to its all-time highs very, very briefly. But for me, it's been knocked back near the bottom of the range. So I could be tempted to be a buyer personally on PayPal. But what do I know? When would you move your stop loss into profit? Let me try and find a trade. And I'll tell you. I'll tell you what, let's use the gold trade as an example. So gold. So I bought gold at 1778 with a stop loss at 1640. So the stop loss is $140 away. So for me, very simple rule of thumb, it has to move $140 in my favor before I touch that stop loss. Because again, and I think I do say this every week, but it bears saying, most people lose money. One of the big reasons most people lose money, their profits are smaller than their losses. So there was a survey done years ago now, I think it's about 8-9 years ago, of a US broker on their clients. And if they would make $100 on a trade, typically they'd lose about $200 on a trade. So most people's relationship between profit and loss is completely the wrong way around. So for me, I don't, if I put a stop on and it's 50 points away or 100 points away, that stop doesn't get moved until the market has moved 50 points or 100 points in my favour. So I don't snatch at a profit. If I'm willing to risk £100 when I do the trade, in my view, I'm an idiot to come out of the trade for £50 profit. It's absolute lunacy. But that's what people do. That's why most people are losers when it comes to trading, because they snatch at profits. So that's the answer to that one. Is Bitcoin testing historical patterns? But it's at an all-time high, isn't it? So for me, like I say, that's bullish, but I would just be a bit nervous up here. as to how it's reacted before. You know, there's been a bit of a lack of conviction, hasn't there? Up around $60,000 for Bitcoin. So that's why I'd say, you know, that I've got the trades on at the moment, but I've got relatively tight. I think I've got stops at 58,000 on these trades. Where is it? So yeah, 57,000 are my stops on these open positions. So for me, you know, if it comes off a bit more from here, I'd be out of those trades and look at it again. You know, I'd still want to be a buyer, but I'm just a bit. You know, it's just interesting that there hasn't been that much conviction to hold on above sort of 60 grand. So let's see. Vix Analysis. Oh, there's not much point in analysing the Vix, to be honest, because it just does nothing. Then it goes crazy. But Vix is the volatility index, so it shows, often referred to as the fear index. It shows how much, basically, how expensive or cheap options are on the S&P. And the Vix is, I mean, it's quite interesting actually that it is so low. The Vix at the moment, this is the lowest it's been since Feb 2020, and we all know what happened next. So, but I think someone asked about the Vix a few weeks ago, and I said I never trade the Vix. I don't think you can. Well, I can't anyway. You know, because you buy it in the hope that something happens that completely spooks markets. And of course, in Feb 2020, it was the coronavirus, and it went absolutely nuts. You know, but we've not seen anything really on that scale since then. So it's interesting. You could say it's showing quite a high degree of complacency at the moment, you know, with the VIX so low. But for me, you know, with stock markets pushing out to fresh all-time highs, it's perhaps not surprising to see VIX so low at the moment. We looked at natural gas, we looked at gold, ProShares, Bitcoin. And yeah, that ETF, I mean, if you want to have some exposure to Bitcoin, and if I wanted it, and I did think about it, actually, before I started this today, I thought if Bitcoin does hold up above these levels, which it isn't at the moment, and I want a bit of exposure, I was wondering I might buy the ETF, because I don't want to get into having to have, you know, however you do it, you know, on an exchange and an encrypted key and all that nonsense. I just want to buy something that tracks the price of Bitcoin. So for me, I think it's interesting, but clearly it's early days, you know, because it only came to the market a few days ago, but it is going to track the price of Bitcoin. And it's down 10% from its opening highs, because Bitcoin is down about 10% from the highs we saw this week. So I think it's a really interesting way for people like me, you know, who want to just have an ETF and sit with it. It's an interesting way to get some exposure to the crazy world of the cryptos if you want it. Yeah, we looked at silver, Adobe. So look at Adobe. It's a deep old sell-off, wasn't it? I mean, for me, that trend is still up. You know, if you go back to the March 2020 lows, the trend is still up. So almost a perfect move back to that trend line. Look at that, back to when it moved down to 560. So again, it's one of these dilemmas, isn't it? That I have anyway. The market has moved. The stock price has moved $80. It's about 15% away from the 6th of October lows. It's a heck of a move. So do you buy it now, or do you wait to see if there's a pullback? Because for me, I still want my stop loss down here somewhere on Adobe. So it's bullish. I just wish I'd bought two or 3 weeks ago. So the question is, you know, do we get a sell-off? I don't know, but that trend is still up. I just realised I missed someone's question. MGM and American Water. MGM. Is that MGM? Yeah, Resorts. That looks good to me, doesn't it? That looks like a great trend, doesn't it? Fantastic one, that. Let's have a look at that. Let's have a pick up on the trend from March of last year. Almost textbook. Oh, we should end the live stream here. We are not going to see a better textbook trend than this afternoon. So yeah, great trends in MGM, pushing out to its best levels since, could be forever. It could be all-time highs. Don't know. The data on this only goes back to 2015. Yeah, great trend. So for me, again, I'd be a buyer on dips. If I was a buyer now at 48, the closest I'd want my stop loss would be the other side of these lows just before the breakout, down at 43. But that trend is definitely still up. 36 was fantastic, pretty good support, wasn't it? $36. Yeah, that was the point to get in, wasn't it? Again, mid-September on the move back to 40. But a great trend in NGM. And American Water. I'm guessing that's a water company, isn't it? Some of the utilities have done well, actually. I've got a few utilities like Severn Trent and National Grid, and they've done all right the last couple of weeks. They're not the most exciting stocks in the world. That's the American Express. If I could look at the right company, it might help. American Waterworks. Okay. Let's have a look. I mean, that looks like another reasonable trend, doesn't it? I think it's an interesting one, I think, something like this, because you could say, if you want to make a bullish argument, you could say, well, obviously the trend back to March is still up, and it is. But what does that sharper trend look like from March of this year? You could argue that's in a bit of trouble, but I would give it a go. I would buy it. There we go. I'd buy it. But maybe we'll do that trade on that, actually. Let's do a little trade on that. The trend is still up. And I'm going to assume, my assumption is it's going to go back to at least the highs. 160 was good support. So I'm going to have a stop loss. So I'm buying at 175-ish. Put a stop loss at 158. Let's do that trade. So for me, let's go. So we said 158 for a stop. 158. Risk £100 as usual. So we need to cut that right back. So if I do 10... 8, there you go. So buy 8 shares on leverage at 175, stop at 158, other side of these lows. Risk is 98 quid. Let's do that. So I think that's interesting. I've got my stop about $18 away. So again, if the market needs to break out to new highs for me to move the stop, and you need to be patient, or I need to be patient. I'm really, again, I've got no interest in where American Water is going to go in the next 5 minutes. I'm more trying to get in on this trend, like with the Tesla share. This Tesla trade back in the 18th of May, that would have been for about 250 quid risk, and it's up 940 quid. So it's made almost 4 times the risk. And that's what I'm looking to do, is try and maximize the profit when I'm right and get out for a smaller loss than my maximum profit when I'm wrong, obviously. So we'll see. We'll see how that one works out. Adobe, did all that. Dollar yen. Let's have a look at dollar yen. Dollar yen, I think it was a buy. I was looking at that today, actually, and I wondered if it was a bit of a buy, dollar yen. Perhaps not today, but perhaps it's an interesting one to watch next week. So again, we're seeing the dollar weaker today, and it's had a great run since September. It's gone from 109 to 114.5. For me, that's an interesting one to watch next week, to see if it ends up being, if it starts to maybe build a base. We've got a lot of support coming in on the shorter term chart around 113. The market's 113.71 at the moment. I would be looking to be a buyer on that. I probably wouldn't buy it today because it's still weak, but I think 113 is perhaps the big short term level on dollar yen. So let's see what happens. Superdry, the UK retailer, who have, they were, is it Super Group, isn't it? Oh, Superdry. They were a real darling of the stock market, weren't they, in the early days? Famously clothes for middle-aged dads, isn't it? With the old random Japanese logos on them. But they did incredibly well in the beginning. I'm just trying to see how much data we've got. And then the chief exec left, didn't he? Or one of the founders left, and I think he might have bought back in, or whatever. But you can see the story of the stock from 2012, £2.70 up to 20 quid in January 2018, and from 20 quid to £2.30 today. For me, I wouldn't be a buyer. I think, it's got absolutely clobbered since July. It's halved in price since July, and the problem is, human psychology is, it's halved in price, it must be a bargain. Well, there's nothing to say it can't halve in price again over the next 3 months. If I really was a buyer, and I wouldn't be a buyer yet, because just today you can see it's moved to a new low for the down move, okay? So you've got to ask yourself, what are the chances that you pick the bottom in Superdry of this latest sell-off? I'd say it's highly unlikely that you or me is going to pick the bottom in Superdry. So I want to be a little bit patient. So for me, I'd be a bit patient. I wouldn't really trade it anyway, but if I absolutely had to, I'd wait for a bit of stability to come in for the stop price, and I'd have my stop loss the other side of £2. So yeah, but a real horror show, isn't it? The last 3 months, Superdry. There you go. Intel. Let's have a look at Intel. How are we doing for time? 1:15. Okay, Intel. They had earnings last night, didn't they? Didn't their earnings beat expectations last night? We'll look at Tesla as well, actually. Intel just looks, I mean, it looks a little bit boring, doesn't it? I wonder if, I don't know if the whole chip thing, the global chip shortage is, I'm presuming, having an impact on Intel. For me, it's just boring at the moment. I mean, you could take the view, okay, we've seen a big move since their earnings last night. I think it was last night. Yeah, there you go. So the earnings came out after the market closed last night by the looks of it. So they've gone from $56 to 50 in what is it? Not even 24 hours. So you could take the view, an aggressive trade would be to take the view the market's overreacted. So an aggressive trade would be to be a buyer. And if I was doing that sort of aggressive trade, I'd put my stop loss underneath the low for today. So I put my stop loss the other side of $49. So really tight stop, you know, $1 and a bit stop. If the market even if Intel even retraced just half of that move, you know, we're going to go back to 53. So I've got $3 upside and $1 downside. So it's an interesting aggressive trade down here. It's just, but what I would actually do is just wait for the dust to settle a bit and see what happens, because there's no real trend there. It's just all a bit boring, isn't it? What leverage do you use? How much goes to fees? Well, I use the leverage I'm allowed to use. So in the UK, for example, there are set leverage limits. So if I trade Tesla, for example, I think the leverage is 5 times, isn't it? So if I buy one stock in Tesla at 908, that's $900 exposure, and a fifth of that in pounds is 130 quid. Yeah, so on stocks, it's 5 times leverage. On other markets, you know, it's different. I don't know what it is on copper and stuff. So I use whatever's available. I don't choose my own leverage. You know, I use whatever's set. And then I do pay fees. And people do tie themselves in knots about the fees. And I would say we have got some of the lowest overnight fees in the industry. But it's something that new traders don't really appreciate. But it is something that more experienced traders appreciate. But if you look at Tesla, for example. So on Tesla, my overnight fees are 49 pence. So I'm paying 49 pence every night to hold a $4,000 position in Tesla. So it's costing me about 15 quid a month. So it is, you know, there are fees in there. But for me, my typical trade maybe lasts 2 or 3 months. You know, it's not ideal if you wanted to hold a position for 12 months, you know, contracts for difference, these sort of things are not ideal for that. But, you know, the fees are all part and parcel of trading, you know. So for me, 2 or 3 months or less, I'm quite happy to hold the position that way. I mean, Tesla, I've held it for a lot longer because the thing has taken off this month, you know. But clearly, I have to pay the fees on this account the same anyone else does. And Tesla is making all-time highs, even as we speak. It's interesting that they had their earnings this week, beat expectations, and here we are. The stock is at $905. So for me, that's a big breakout in Tesla. I really need to actually buy some stock in Tesla for myself, but I don't know what's going to happen up here. Maybe we get a bit of a pullback. I mean, it has had a heck of a run. You know, it's gone from 720 in September to 900 now. So what's that? It's nearly a 30% move. 25% move, something like that. So I mean, it's a bullish move in Tesla. Let's see if we can hold it up here. But I should really buy the next Tesla dip, I think. But that looks pretty bullish to me. So let's see. So someone's asking, would you short Tesla? No, I would not short Tesla up here, because you're just, at the moment at least, you know, famous last words, you're standing in front of a runaway train, aren't you? You know, so who wants to stand in front of a runaway train? What else have we got? How much time have we got left? We've got about 10 minutes left. CrowdStrike. It's the regular check on the CrowdStrike price. Free money, reckons Nicholas on CrowdStrike. Let's have a look. Let me see. I do remember it was a good trend. So let's have a look. Yes, indeed. Well, it's just about free money, you know, because it is pushing out to all-time highs briefly today. So if you've bought CrowdStrike at any point in the past, I think they're a security, aren't they? Software security thingy. Yeah, great trend in CrowdStrike. Look at that trend. Lovely buying opportunity at 240 in October. And here they are at 288. So lovely trend. Well done on that one. Cocoa. Let's have a look at cocoa. Let's have a look at some of these. Let's have a quick look at some of these commodities. Actually, have I don't think I've got a trade on. Have I got a trade on cocoa? I might have a trade on cocoa in this account. Yeah, there we go. Got a trade on cocoa from the 25th of June, buying it at 23.22. So it's a funny one, cocoa. It goes a little bit boring, but you can't argue with the trend. You know, going back to 2017. This is what I meant with all these raw. Cocoa's not a good example. We'll look at some others in a minute. So for me, the trend on cocoa is still up. If I was a buyer now, though, I'd probably want my stop at the very least down at 2,400 on cocoa. But that trend clearly up in cocoa. But if you look at some of the other commodities, I mean, I came out of my cotton trade, I think it was last week, and I'll be looking to get back in again. You know, some of these commodity prices, raw materials, look at cotton. It started the year at 0.75, whatever that was. Let's call it 75 cents. Who cares? And it's at 106 at the moment, so the price is up 50%. Price of cotton is up 50%. You know, that is going to feed through, obviously, into the everyday cost of stuff. Coffee is another one. So coffee started the year at 120, and here we are at 205. So that's up more than 50%. Copper's having a bit of a run again. I think it's been a bit of a boring market in recent months. But we are, and I remember saying when it's bubbling around here, yeah, I'd stick with it. The trend is still up, and it had a bit of a run again. It's come off a bit since then. But so many of these commodities have pushed higher. You know, that's why I think inflation is not going to be as temporary as people seem to think they are. Facebook is famously thinking about changing its name, isn't it, to something. Facebook, I would probably still be looking to be a buyer, I think. I don't know. What do you reckon? I would probably give it one last chance of recovering and be a buyer. I mean, that trend is still, I'd argue that trend is still just about up. So for me, did it have earnings? It had a big move yesterday. I'd wait for things to calm down. I'd be a buyer and I'd put my stop loss the other side of 300. So I think that could be an interesting stock to watch next week. Facebook, see if it sort of stabilizes a bit down here. Dollar yen, we looked at that. New Zealand dollar, US dollar. I was going to buy that the other week. It was about a week and a half ago, and I missed it. I was thinking that New Zealand dollar, US dollar. I think you're right, actually. From a short-term trade, perhaps it could well be a sell up here. We got a bearish engulfing candle yesterday, so if I was going short, the closest I'd have my stop would be above the high of yesterday on New Zealand dollar, and it's pretty overbought on the RSI, and the RSI did an okay job last time round of calling the top, so it's interesting here. I was just wondering, I think it was the middle of last week, I don't know, or maybe actually I was thinking maybe the correction is over. Maybe it is. I mean, I think perhaps it will come under a bit of pressure next week, but I'd be looking to buy a dip next week. Let's see. I think that's a really interesting one to watch next week or over the next couple of weeks. But yeah, I could definitely see the logic behind being a seller up here for New Zealand dollar, and with a relatively tight stop, the risk reward looks pretty good. Newmont Corporation. Is that a gold miner? I've seen that one get mentioned a couple of times. Newmont Gold Corp. So I've got a trade on that already. I don't know why I bought that actually. I don't know what I was thinking of with that. I think there's a bit of bottom fishing going on that. I suppose because it's a gold company. It's clearly what goes on with the gold price has an impact. I bought it. I don't know when I did the trade, but I bought it. You could argue, I would argue, that the trend, the correction or the downtrend, whatever you want to call it, maybe it's over. I'd rather be a buyer on a dip. I think that's another interesting word, an interesting one for maybe next week to watch it and see what happens. But if I was a buyer, I'd put my stop the other side of 52 on Newmont. Clearly, it's had a bit of a blip higher today because of that strength we saw in gold. So I'd maybe be inclined to wait and see if it sells off a little bit next week. We did natural gas, we did American water. So if you missed any of this stuff, once we finish this live thing, you can watch the recording of it. So anything you missed in the beginning, you can watch again. How much time we got? It's 5 minutes left. Cloudflare. Let's have a look. Oh, it's gone nuts, isn't it? What does that company do? Web infrastructure and security, blah, blah, blah. Yeah, I mean, clearly that trend is up, isn't it? The only problem I have with ones like this is where do you put your stop? Where would I put my stop? Don't know. I mean, it's gone from 110 beginning of October to 182 now. So it's moved, nearly 70%, isn't it? So, but where would my stop go? I'd probably have to almost stick a pin in it and say 150 for a stop. So clearly strong, but just when they've moved this far, I struggle to trade a market like that because just in case it ends up collapsing back. So I'd rather buy a dip, but the risk is the dip doesn't come. So it's great trend, but tricky one for me up here. Rolls-Royce is just boring. I think we've looked at these before. They're just bombed out, aren't they, Rolls-Royce? So this is Rolls-Royce. It's not Rolls-Royce, the car company. It's Rolls-Royce engines for planes and stuff. They're just, over the years, it's performed incredibly badly. And I can remember, I think it was from 2010 to 2014, they did really well. But look at that. I mean, for me, a chart like that, I just look at something else because it's just bumping along, isn't it? It's just, what do you do? So for me, it's a nothing thing, to be honest. There's no interest in Rolls-Royce. No. So I can't say too much about that. It's just dull. Amazon. Let's have a look at Amazon. I think Amazon has been another disappointing one. They blipped out on their earnings, didn't they? And they've fallen back in again. It's just boring, Amazon. I did think when it blipped out, this is the move that actually starts, but it isn't. And it's just sideways, and at the moment, it's stuck in the range, isn't it? We've got lows in at 28.60. We've got highs in wherever the highs are, up here somewhere, and it's just in the middle. So for me, up here be a seller, down here be a buyer, in the middle do nothing for me. So yeah, that's it. Yeah, we looked at Cloudflare. Can you teach us how to use the pitchfork? No, I've got absolutely no idea how you use that pitchfork. Look at that! It looks nice, doesn't it? Freeport McMoran. Are they? Hang on a second. Let's have a quick look at those. Freeport McMoran. Mining, yeah, I thought they were mining. Is it? Oh, copper. I thought, copper, gold, and something else. They're just really struggling again, aren't they? Which is, I suppose, in a way, it's probably not dissimilar to the copper chart. For me, again, it's it's perhaps a little bit boring, because what I want is stocks that are trending, and we're at the top of the range, the recent range. So for me, if it got knocked back to the low 30s, it's a bit more interesting. If it breaks out through 40, then it's interesting. But at the moment, I think perhaps the risk is it could come under a bit of pressure from here. So let's see. Let's see what happens. What's this person doing? Aluminium. Let's have a look at aluminium. We haven't looked at that because I didn't actually realise we covered that as a market. And what's it doing? I mean, there's a good trend in aluminium. Again, it goes back to this whole inflation story. All of these raw materials have gone up an awful lot this year. So aluminium was at 1945 and 28, so it's $1,000 higher So it's about, again, 40% higher on the year. That's an interesting market to watch next week. I've never traded aluminium. Maybe next week is the time for me to do a trade in aluminium. The trend is up. We've come off a lot over the last week. I'd be looking to see if we get a bit of stability coming in. Perhaps, 2,600 to 2,700 is the zone to watch. But for me, I'd be looking to be a buyer of the dip on aluminium. Right, we're going to have to wrap things up there. So lots to watch next week. I mean, for me, stock markets are the ones to watch because the S&P is so strong. But crypto, all this other stuff we've looked at as well. So as a reminder, Capital.com to find out more about the company, open an account. Do go and open an account if you don't have an account. We do, clearly, I do enjoy doing these, but they do have to pay me for it. And we do it to try and get more business. So if you don't have an account, try us out. You can try these different markets. You can drop me an email, david.jones@capital.com with any questions. At Jones the Marcus on Twitter, and follow Capital.com on YouTube, Twitter and Facebook. Right, that's it. We're done. Thanks for coming along. Do it all again next Friday at 2:30. Lots of really interesting stuff. Incredible comeback by stock markets, I think, over the last few weeks, or a good comeback by stock markets. And Bitcoin at all-time highs. Interesting next week to see if it can regain 60,000. But we'll do it all again next week. Don't forget to subscribe to the channel if you haven't already. And enjoy your weekend.